Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, lots to digest this Friday morning. Of course, the election season has kicked off. We have concerns over geopolitical tensions. That has had a bearing on the texture of the global markets this morning. We saw knee-jerk reaction by the Dow futures. We saw the GIFT Nifty at one point slumping by over 400 points, but of course it has come off the opening lows. But of course, we'll also be getting you, opinion on stocks like Bajaj Auto and Infosys that have reported their numbers yesterday. The markets will be reacting to that as well. And of course, we'll be talking about a whole host of stocks, and we'll be getting all your stock-related queries answered by our experts as well on the show. So if you have any queries, keep them coming in on our live feed on YouTube, and we'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. The 2024 Lok Sabha elections get underway. Polling begins for first phase of elections with 102 seats across 21 states going to polls in the largest of the 7 phases. Now, voting will take place across all 39 Lok Sabha seats in Tamil Nadu and all 5 seats in Uttarakhand. Geopolitical worries build as reports suggest Israeli missiles have struck sites in central Iran. But according to Iran state media, Isfahan nuclear sites are safe. The potential escalation sees the GIFT Nifty falling sharply, indicating a gap down start for the Indian market. The Dow futures, had plummeted as much as 400 points at one point in time. Crude prices surge above $90 a barrel amid reports of an Israeli retaliatory strike in central Iran. Gold surges over 1% in early trade on rising tensions in the Middle East. Wall Street closes weak. S&P 500 corrects for the 5th straight session as it heads for its worst week in almost 6 months. Asian markets also head lower in early trade. Infosys reports a shocker in the 4th quarter. The IT giant misses estimates on revenue and margin and slashes FY25 revenue guidance sharply to 1 to 3%. Meanwhile, strong domestic sales helps Bajaj Auto report a robust Q4. Well, just about 10 minutes to go for the market to open. Yesterday, of course, we saw a fair bit of volatility with the Nifty spot ending below that 22,000 mark, down over 150 points. There was a fair bit of uptick in the volatility index as well. But of course, let's bring on board our guest for today. Joining me is Dipan Mehta, director at Elixir Equities. Great to have you on the show, Dipan. Lots to digest this morning, right? Seen the geopolitical tensions escalate. You have the election starting off, and of course, results from Infosys and Bajaj Auto. But in light of what has happened this morning, the situation is rather fluid. But going forward, do you think we will continue to see a lot of volatility on the street? And GIFT Nifty is hinting at a gap down of 250 points now. And we've already broken below that 22,000 level. So, going forward, what are your expectations as to where we are headed?
Yeah, Nandita, thank you for inviting me on your show. And, we are entering into extreme volatile times over here, not just because of the geopolitical events and what happened last night, but also because it's the earnings season. And during earnings season, there is always heightened volatility, at least stock-specific volatility. And stocks tend to react to their numbers, good as well as bad. So we should expect a high degree of volatility over the next 6 to 8 weeks or so. And then we have the general elections also. If there could be some, changes in the expectation of the seats or this, as far as the street is concerned, then that would also add to further volatility. So we are entering into a bit of a tricky situation as far as the markets are concerned. And I think investors should remain cautious and try and increase their cash levels.
All right. That's how you should be positioned. In fact, as we kickstart the election season as well. But let's talk about Infosys. TCS had kickstarted the earnings season on a strong note, although revenue growth was modest. But Infosys, a shocker to say the least. However, it's the 100 basis point impact in revenue and margins are due to one-time contract change. Some brokerages believe that, if you keep this aside, the numbers would have been in line. But, going by the commentary from the Infosys management, what are your thoughts? Do you think now revenues have bottomed out here? What are your expectations?
See, I think the numbers are disappointing to say the least, and the guidance being slashed also is not great news. We were in fact expecting a more positive commentary from both TCS and Infosys, but that has not come through. and maybe this entire generative AI opportunity as well as revival in tech spending is just getting pushed further and further away. So from that point of view, at least on these numbers, you can't be positive on Infosys or TCS. So I would just say it's better to avoid them at this point of time. If you're already holding the stocks, you could look at liquidating them slightly. And let's look for what numbers come from the mid-cap software companies, because the mid-cap software companies are the ones which have been outperforming. They've been driving the growth within the segment. They are focused on niche verticals within the IT space, and they have been able to sustain reasonable growth rates. But that also will get tested in this quarter. So I think the earnings season has not started on a good note. So let's wait and see how this actually shapes up.
Right, but what about TCS? You mentioned, of course, you'll wait it out for the results from the mid-cap software companies, but TCS has, started the season on a good note, so to say, because, margins are at a 3-year high there. Going by the commentary from the TCS management, they expect FY25, of course, to be better than FY24. So would you, advise looking at a TCS within the large cap IT basket?
I think TCS is great for institutional share, investors to buy. From a retail investor's perspective, like us, we want to look for companies which have at least high teens type of growth rates on a sustainable basis, and neither TCS nor Infosys, fit that criteria. So from that point of view, we want to have almost virtually no investment in these large cap companies. Although safe investors who want to just have an exposure to equities can do so through mutual funds. But the real interest and the strategy to get superior returns is to go for high growth companies or extremely low value plays. And TCS and Infosys are neither low value plays or high growth companies per se.
Okay, shifting focus to Bajaj Auto, all-round beat, and commentary is also pretty strong. The company has said that margins, it's pretty confident on margins, even though it has scaled up its EV portfolio, right? Going forward, would you say that valuations are pretty rich, and because of that, would you maintain, not getting into the stock right now? Because brokerages, although they are positive, they have cited rich valuations as the reason to maintain their sell rating.
Also, Nita, the stock has gone up significantly. I think the last quarter was absolute blue sky scenario for the auto industry, where they had the full benefit of rising volumes, higher premiumization because of, and which led to higher average selling prices, and operating profit margins also improved because of stable raw material prices. But look, going ahead, things are going to get more tough for the auto industry. They have a very high base effect to work on. To get growth rates beyond that is going to be difficult. A large part of the premiumization has got captured in higher average selling prices. To increase it further from these levels is going to be a challenge. And we are seeing inching up of raw material prices. So, and it's going to be a bit challenging. These stocks were great to buy a year and a half ago. Since then, they have doubled, gone up 60-70%. I don't know. I don't have the exact returns. But from these levels, they could at best be market performers. And, one should expect slowdown in their growth rates over the next 3-4 quarters.
What about auto ancillaries? They have also been witnessing a very good run, especially in the wake of Elon Musk's impending visit, and he may outline his India plans during his visit. We've seen a very strong run up in some of the names like Exide as well, right? So how would you play the auto anc stocks now? Would you say even they have run up quite a bit?
See, I think in auto ancillary there are pockets of opportunity because they have export businesses as well. And the replacement market also is there, and then this entire shift towards EV will throw up new winners and new losers as well. So we are positive on the auto ancillary, but we're getting into an earnings season, and typically we won't do any major move before the earnings season. We want the companies to report their numbers, see what they have to say, what the outlook is, and then look at investing. And overall, Nandita, view on the market is cautious. We are going to see another correction or another decline in stock prices today. I would suspect that the charts and the entire structure of the market certainly has become weak. So, while we may be positive on a whole host of shares because of long-term reasons, from a strategic point of view, it's better to just wait out this corrective phase, try and get into cash as much as you can, and look at buying into the markets when it is, really correcting, or it is at reasonably lower valuations, and there is some margin of safety.
All right. Although you will be cautious on the markets now, but for the next 2 to 3 months, which are the pockets one should look at nibbling into on dips?
Vanita, we don't want to nibble into anything right now. There's an earnings season underway. So typically what happens in an earnings season is that companies will report their earnings. They could be better than street expectations or our expectations, or worse. And then managements, of course, explain how the quarter went by. And then you look at what the valuation of the company is in terms of price to earnings, price to book. It's like a reality check that, this is the company, this is what it has reported. Analysts tend to rework their forecast for the company every time the results do come out. So a clearer picture emerges after the numbers are out. And at that point of time, it's better to take a fresh view on the company. So I would say that, given our cautious view, we just want to just stay put for the time being. But, when things tend to clear up post earnings season, post some correction in stock prices, we do feel that sectors like maybe pharma could do really well because they have certain positive trends are taking place in the US generics market. Secondly, I think companies which we missed out on earlier, especially highly consumer-oriented businesses, those if they're available at reasonable valuation, those could also be considered. And a few select maybe microfinance companies or NBFCs also, if they've corrected significantly, those could be considered. So it's not that we have any new investment ideas or great new investment themes. It's just that the same companies you want to try and buy at reasonable valuations, and you could add capital goods also to that particular list.
All right. Lastly, your thoughts on how HDFC Bank's fourth quarter earnings may pan out this time around. If you look at the Q4 update, deposits saw a good uptick compared to last quarter. So your thoughts on the earnings expectations from HDFC Bank?
No, I think the earnings will be better. Already the street is pricing in better numbers coming in from HDFC Bank because of the Q4 update. And from this point on, maybe the worst is over for HDFC Bank. Look, we are positive on the Indian economy over the medium to long term. Growth rates, GDP growth rates, corporate profits, overall, volumes will be certainly better. And then banking sector, of course, is going to benefit from those higher growth rates in the economy. So I'm very positive on HDFC Bank. Just negative on the market, so wouldn't want to, get into it right now. But there's definitely positive on HDFC Bank.
Point taken, Mr. Mehta. Thanks a lot for taking out time and joining in on that note. But let's quickly take a look at how the markets have opened up. A gap down start, but it isn't all that bad because at one point in time the GIFT Nifty was hinting at a gap down of 400 points. We started almost 200 points lower for the Nifty. 21,800, that crucial level is being maintained for now, but of course there is a threat of the index breaking below that as well. Sensex is down 600 points, and if you look at the broader end of the markets, the cut is fairly deeper in the broader end of the markets compared to the benchmarks. The mid cap index is down over 1%. Let's also pull up the small cap index. Okay, small cap index is well down 1% or thereabouts. If you look at some of the sectors, the Nifty Bank index continues its weakness. Down about 1% or thereabouts, and I want to pull up the Nifty IT pack. Let's see what that is doing, because Infosys, of course, reported a very weak set of numbers. It is weighing in on the IT pack, of course, over 1% cut on the Nifty IT index. Pull up a Infosys if we can and see how that stock is reacting to the weak guidance that it has given. 2% cut coming in, so the cut isn't all that deep just yet. Of course, the company's commentary that the margins and revenues were in fact fell so much because of a particular contract, and because of that, of course, I think that fall is fairly tempered right now. But as the session progresses, we'll see how the stock really manages to fare. Aside of that, let's also see how Bajaj Auto is doing. The numbers were an all-round beat. Margins, revenues, profits, topped estimates on all those counts. Bajaj Auto as well down 2%, understandable given the fact the entire texture of the market is on the negative side on the back of escalating geopolitical tensions. Of course, the situation is pretty fluid there, but of course, coupled with that, there will be some bit of poll volatility as well as the election, phase 1 has started today, and of course, we are also reacting to the earnings reports that have been trickling in. all in all, the texture of the market is, of course, negative. 180 point cut on the Nifty as we speak. But on that note, let me also bring on board a technical guest for today. Joining me is Raja Venkatraman. Well, he will be joining us in a bit, but let's see what other stocks are doing. I want to pull up an Adani Ports. It has a Haifa port in the northern Israel, so it will be reacting to concerns surrounding the escalating tensions between Iran and Israel. Let's pull up an Adani Ports and see how that stock is doing. I think it is among the top Nifty losers. Aside of that, what's also not doing well is 0.8% of a downtick coming in there. Not a big reaction as was being expected, in the pre-open. But let's also see what other stocks are doing. BPCL, that stock is down 3.5%. HDFC Life is the other one that reported numbers yesterday, 4% down. Bajaj Auto, although the numbers were good, but in tandem with the markets, this stock is also down somewhere around 2%. Infosys, of course, down 2%. Axis Bank, NTPC, Coal India, L&T, SBI, these are some of the other big losers on the index. ONGC holding out, given the fact that we saw a 3% surge in crude prices on the back of reports of Israel's retaliatory strike against Iran. Apollo Hospital, Cipla, ITC, Sun Pharma, these are some of the few gainers on the index. Aside of that, let's also see some other stocks in news. ICICI Securities, it reported its numbers yesterday. Revenues are up 75%. Let's see how ICICI Securities is reacting to its numbers. EBITDA up 96%. Margins also saw a good uptick, nearly 70%. Vis-a-vis 62.2%. So, 8% uptick where margins are concerned on a YY basis. ICICI Securities, that stock up 0.5% or thereabouts. So gains across the stocks are fairly muted and tempered this morning, in line with the texture of the market. But let me also bring on board our technical expert for today. Joining me is Raja Venkatraman, founder of NeoTrader. Great to have you on the show, Raja. Of course, we've started with a gap down, but it isn't as bad as was being expected when you looked at the GIFT Nifty early in the morning. But 180 point cut, 21,800 holds for now. Of course, the kind of roller coaster ride we saw yesterday, volatility is expected to persist. But what is the floor that one should be looking at on the Nifty right now?
See, when you're looking at the markets, good morning, Nandita. The entire market is right now in a reaction mode, and the kind of negativity which we are seeing right now continues to be a challenge for all of us. Now, looking at the way the markets were expected to begin, we all thought that there would be a gap down, and the gap down would be very, very huge. But what's really happened is that there were some news flows that came in, and that has really given us some sort of relief. Now, looking at the way the markets are behaving, I would continue to believe that for the moment, it could be a sell on rally till we are able to cross about 22,200. So 22,200 was a very important level, and that has got broken down very sharply. The continued sharp declines that we are seeing in the market will be a feature which we can expect for the coming few weeks, as we are entering the election phase right now. It's beginning today, and that could continue to pose some problems to any kind of recovery here. So while we are looking at the markets, while we are trying to trade the sentiment here, we should understand that the markets are not going to be easy. So at this point in time, I would advise that one should go light on their positions and look at levels of 21,500 to 600 to buy into, because at the current juncture, I don't see any kind of recovery to take us beyond 22,200. So on the upside, I am looking at 22,200 as a resistance zone. On the lower side, 21,500. Yes, the level seems large, but then the way the market is behaving, any level seems to be small at the moment.
All right, broad range of 21,500, 600 to 22,200. But what about the Nifty Bank Index? Raja, HDFC Bank will be reporting its numbers today. What are the levels you will be watching out for on the downside on the Nifty Bank Index? And how would you be positioned on an HDFC Bank before the earnings?
See, when you're looking at HDFC Bank, one has to be very careful that this particular bank has not shown any kind of recovery here. So whatever recovery we saw on the charts did not materialize, and that has become a big problem now for all of us. All of us are trying to continuously track HDFC Bank because of its weightage. But then one needs to understand that right now the markets are challenged for any lack of triggers. The saving grace for this entire market could be the result season. Why I'm saying that is because the overall markets have been very good. The companies have performed well, and I think that the result season could be the the inflection point, so to speak. So now around the current levels where HDFC Bank is trading, it has come into some decent set of supports here. So those who are looking to buy HDFC Bank from a 2 to 3 day play can look at the current levels of 1480. Otherwise, the supports are emerging only towards 1400.
All right, support around 1400. But how would you be positioned in a Mastech after yesterday's 20% up move? Would you say that the charts are looking a bit on the oversold side, or do you think it's a good level to jump into?
Yeah, the prices were already oversold and they have been consolidating for almost 10 to 12 trading sessions. So what we expected yesterday what we saw yesterday in Mastech was recovery from lower levels, and I think that based on the higher time frame charts also, it looks like the momentum should continue. So this could be a good point to enter into Mastech.
All right, a good point to enter into Mastech at the levels that Raja just mentioned. Let's talk about a HUDCO. Department of Public Enterprises has granted this company a Navratna status. Over the last 1 month, we've seen a good 8% uptick, but has come under a fair bit of selling pressure in the last 5 sessions. Any strategy here?
HUDCO has not really been performing. Yes, there are some news flows which keep coming in of urban housing, etc., government initiatives, etc. But then the stock has not really performed. So even despite news triggers, if a stock is not performing, I would tend to skip this for the moment.
All right. And what about a Gokul Das Exports? The QIP issue has opened up and the floor price has been set or fixed close to the 790 rupee mark. The stock is somewhere around 810. What would you be watching out for here in terms of levels?
See, this particular stock has been under pressure for almost a year now. And this stock has not really given any kind of confidence. And the stock continues to make lower highs, which is not a good sign. So if you are looking to buy into this stock, once again, it would be an avoid from my side.
Okay, I want to talk to you about a Vodafone idea. Of course, the FPO issue is open, right? Most of the analysts we've spoken to have said that the risk reward looks favorable at the current juncture. So for a 3 to 4 month perspective, how is Vodafone idea looking like to you on the charts?
Yeah, so Vodafone Idea has been hugely patronized by traders and also institutions, and somehow this stock, despite its low value, it is catching attention because of its patronage. So what I find is that this stock has spent sufficient time in consolidation, and it looks to be a good bet at current levels for an upside towards 16 to 18 within the next 3 to 6 months.
Okay, just want to remind our viewers, keep your queries coming in because we will be taking them up with Raja. So if you have any stock related queries that you want, urgent advice on, send them in right now and we'll try and take them up. But Raja, how would you play an Infosys now after a howler set of numbers? Of course, I was talking to Dipan, earlier on in the show, and he mentioned that, he would avoid Infosys at the current juncture given the kind of guidance they've given. 1 to 3%, has missed the street estimates by a wide margin. So post the numbers from biggies like TCS and Infosys, how would you approach the large cap IT pack?
See, the large cap IT pack, I have been saying this on the show for last so many months, that the large cap IT pack never was in my radar for, venturing into the IT sector itself. And that fact continues to reiterate with every result that after every result, the stock has only gone down. And yes, there was a brief rally which we saw in 2023 since the highs in Feb, the stock has come down very sharply, and I don't think that the fall, if it is not able to sustain the levels of around 1280, it's going to go down further. So I would look to stay away from Infosys. Do not look to buy it at lower levels, because Infi has got a history of delivering returns, and there are various news flows which say that you have made X return with Infi, etc. But now there are better sectors, better stocks that you could play, and that's what one should be doing rather than looking to buy this at lower levels.
All right, that's the advice on large cap IT, particularly Infosys. But let's start taking up some of our viewer queries then. Alex has written in, wants to know your thoughts on an Indus Star. He wants to know the resistance and support levels. Indus Star, 44% gain over the last 1 month, almost 45%. And it is of course making fresh 52-week highs consistently. Would you advise looking at it now, or buy on dips, and resistance and support levels?
Yeah, so let me tell you that this has been one of the most tracked and most active stocks as far as the current month is concerned, and I continue to trade in this particular stock, and I continue to advise this as well, because this stock definitely has got a potential to move towards 600. And why I'm saying this is, amongst all the telecom stocks, this stocks has come out of its bad phase, and the kind of steady patronage which it is receiving from the brokerages, from the traders, clearly spells out that this stock is going to be bought even at lower levels. So those who have capital should look to buy it at current levels, look for dips to buy into. So for me, the support levels would be closer towards the 320 mark, where I would look to buy into this stock. And so buy at current, buy around dips to 320, 325 with a stop below 315 for an upside towards 400, 425, 450 could be a target which you can expect in the coming month.
All right, that's the view on Indus Towers. Buy on dips. Alex, I hope that answers your query. Viru Paksi wants to know your thoughts on large cap IT. We already discussed that, so perhaps you could rewind the feed a bit and watch it. But a couple of queries coming in on the specialty chemicals basket. Maheshwar Bhanu wants to know your thoughts on this particular sector for a medium to long term perspective. He wants to know if it's a good time to add stocks like Fine Organics, Galaxy Surfactant, SRF, Gujarat Fluorochemical and the likes. And I also have a query coming in from K. Naga. I think he wants to know your thoughts on Vinati Organics and Naveen Fluorine for the long term. Any stocks that's catching your fancy within the specialty chemicals basket?
Yeah, so first of all, let me tell about the sector. The sector was in a very good play 2 years ago. Now, ever since the China factor evaporated, what we have seen is that the stocks have all had a sharp decline. And amongst the specialty chemical, if you were to track, then SRF, GNFC augurs well, and I would definitely be a buyer in either of these two stocks. Whichever of these two stocks you are comfortable with, you can go into trade into this. And the other stock which you mentioned is Fine Organics. Fine Organics is also a good stock which you can consider, and these three would be a good names to buy for the next few months. But then do note that this sector is currently limping. So there are better sectors available like the defense space or sector space specific trades have now slipped into the backside. Now what you have to see is stock specific action, and the result season which is has started right now will give a tailwind to that particular aspect, that some stocks which have managed to hold out at the current market juncture are the ones which will trade better. So there are some notable metal names that have woken up like VDL, Hindalco is now waking up, there is Hind Copper, so NMDC, SAIL. So those are the stocks which you should go into. I don't subscribe to any particular name, any particular sector at the current juncture of the market. The last 4 months market though is had quoted 22,800. The journey towards 22,800 was not a very pleasant one. It was filled with pockets of gaps, pockets of volatility, and what we are seeing in the last 1 week it has completely poured cold water over whatever bullish sentiments which we were holding. But then the election phase is coming in, so volatility is going to step in. Now that volatility is going to be countered by the result season. So that's why I said that stock specific action is going to emerge. So one should stay alert and look at stocks that are managed to hold on and they are continuing to do well rather than chase some stock at the bottom.
All right, that's the view on various sectors, including the specialty chemical sector, metal sector, and the likes. But a couple of more queries, let's try to squeeze in. HUL, Hema Jagdish has a query on HUL for the short term. Well, HUL, of course, has been stuck in a downtrend, in tandem with other FMCG stocks. For the short term, if somebody wants to trade into this counter, would you suggest?
Yeah, again, the sectors which we are discussing are the ones which are not willing to get up. One was IT, other was specialty chemical, and the third is FMCG. Again, the FMCG sector refuses to wake up despite all the positive news flows like the inflation easing, IIP numbers going up. So positive currents are there, but at the current juncture, if you would like to trade into HUL, I would not be a buyer in HUL. Solely the reason being that the stock has not really shown any promise at the moment, and it has not reached any kind of meaningful supports as well. It's actually breaking supports, so it is an avoid from my side.
All right, avoid HUL. I spotted a query on MCX on our feed. Any thoughts on what one should do with an MCX? Has given good returns, but I think within the week it has seen some bit of correction.
Correct. So this stock definitely augurs well, and amongst all the exchange stocks, this stock is looking to break its high around 3900, and I would say that this stock could carry the journey of the upward bias further. So one should, if you observe the MCX price action, it has managed to hold on despite the kind of rampant volatility which we have seen here. That means that at every dip there is a buying opportunity in MCX. So one should look at such kind of stocks and trade them.
Okay, that's the view on an MCX. Couple of queries on IDFC First Bank. Virupaksi and one more person had put in a query on this particular stock. Here, what is the stop loss that one should maintain?
The IDFC First right now it is trying to revive after the sharp fall. So right now, if you are an investor, then your stop loss would be below 75 only. But if you are a trader, your stop loss would be at 80 level. So I am giving this stop loss based on the kind of profile of the viewer who is having the position.
Okay, that's the view on IDFC First Bank. Hope that answers your query. How would you play Exide now, Raja? We've seen a very strong up move coming in on some of the auto ancillary names. Abhishek Singhal wants to know your thoughts on Exide Industries in particular.
Yeah, so Exide till few weeks ago, it was a non-starter, and now what has happened is that it has got completely charged up and it has shot up quite a bit. So buying at the current juncture would only entail more risk. So I would look for a dip towards 400 at least to buy into this stock where I see some decent set of supports emerging. Otherwise, I would avoid this stock at the moment.
Okay, the last query really on a Nestle. Of course, there is negative news flow around this company, adding sugar to baby products in lesser affluent nations. And of course, the FSSAI has taken note of that, and there would be stringent action if the company is found to be doing that. Of course, yesterday it saw its biggest intraday decline in 3 years. Here on, if it becomes something as big as when we saw the Maggi ban take place, do you think one should liquidate their positions in the stock now, or do you think hold on and wait for the news flow to unfold?
See, these kind of news flows keep coming in. Despite the news on the Maggi ban, people were still having Maggi. And despite all these kind of news flows, the product will continue to perform. So the thing is that since January, the stock has actually been on a descent. So it's not that the news flow has come in now and then you're seeing a descent now. Since January, the price has been on a descent, and what has happened is that it is now testing the important supports around 2500. So as long as the 2500 level holds, I would not look to exit my position. But if I get on a investment basis a weekly close below 2500, I would exit my position. So I would wait for a week to subside and see. Maybe today is Friday, so at the end of today, if it is below 2500, then I can consider exiting my position. Otherwise, the price have actually come down into decent set of supports.
All right, that's the view on Nestle India. But before I let you go, Raja, what would you be keeping on your radar in terms of, and recommending for viewers in terms of stock recommendations?
So one of the stock which I would like to recommend is Bharat Electronics. Like I mentioned, it is maintaining the premise of holding the higher levels despite the kind of volatility which we have seen. So this definitely augurs well for the prices. So one should look to buy BEL at current levels, right, and place a stop loss below 228 and for a target towards 239 and 243. And one short candidate in Jubilant Food below 441 for with a stop loss at 449 for a target towards 411 and 427.
All right. With that, thanks a lot, Raja, for taking out time and joining in this morning and sharing your thoughts with us. As always, it was a pleasure chatting with you. I wish you a very happy weekend going forward.
Yeah, thank you and same to you.
Well, with that, of course, let's see how the markets are faring at the current juncture. 21,864 is where the Nifty is at. Of course, it's holding out. I mean, although it has kind of recovered from opening lows, but 21,860 on the charts. Mid cap and small caps, of course, 1% cut coming in there. The Nifty Bank Index as well down by about 0.5% or thereabouts. Of course, the opening wasn't as bad as was being feared. We have seen a 130-point downtick on the index, and Infosys as well down 2 to 2.5%. Not a very big cut coming in there as was being feared after the weak performance. But with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Of course, keep watching Money Control for all your other news and updates, and have a great weekend.